future trends, deep insights, industry leaders. This is the iGaming Next podcast with your host, Pierre Lind.
Good afternoon, Robin. How is everything on your end?
Good to see you again, Pierre. I'm great. It's result season, and the most exciting part of the result season for us it is from the Nordics with Evolution, Betsson, Kambi, Kindred, the big Nordic giants, at least traditionally, the giants in the industry reporting.
Absolutely, it's that week of the quarter where all the four giant Scandinavian operators and suppliers are reporting at the same time, which makes this podcast obviously highly interesting, as we are gonna see if we can do a little bit of an analysis of where the industry is heading and where these organizations are heading, of course. And I was thinking, just I noted something interesting here, Robin. The story of the Q3 reports, in some sense, is very much of what's going to happen in the Q4 reports, and I think that's where the investors are looking at the moment. And I think let's, if we jump into straight away, looking at Evolution quarterly report came out today, as we were saying. A funny thing that I noted in the quarterly report is Evolution have stopped mentioning all-time high EBITDA. Evolution have stopped mentioning all-time high revenues because it just happens every quarter. It's just a simple fact of life. The sky is blue, the sea, the water is wet, and Evolution is setting all-time highs every quarter. But still, the investors have reacted negatively to the report. I think the share price is down something like 7-8%. In the time of this writing. And so I'd love to just pass over the ball to you here, Robin. What's your analysis and thoughts on Evolution and the report that came out today?
Let's take a step back, Pierre. And prior to this call, when we were discussing to do it, and kudos to you for inviting sort of an industry man on board to such a call. I think it is interesting to talk from an industry perspective on how we see these companies. We very often hear analysts and they are good and they're important, but I think it's also important to have the voice of the industry represented here. And if you look at the reports, you and I had a chat before. Obviously, the Betsson report was still out, but you asked me how I saw the reports, and it was 3-year pending ones. And I said Kindred down, Kambi stable, slightly up, and I thought Evolution would be up. Because I was expecting a very strong report, and obviously they have been down today, and that's very interesting. Before discussing that, let's go a little bit bigger picture, because this quarter is very special in many ways. Perhaps the first pre-pandemic quarter. I'm obviously fully aware that the pandemic is not to be underestimated and is still raging around the world, but it has looked better in many of the countries in which these companies are in, and society has opened up again. And obviously, if you look at the global data, then iGaming in general was starting to stagnate slightly compared to the historical growth rates that we've seen on a compound level over the last 15, 20 years prior to the pandemic. And then obviously the pandemic changed everything, and we now see expected compound growth rates online north of 20% as sort of a benchmark to compare these reports to. And in general, we're anticipating online gambling to be about 30% of land-based gambling now pretty soon. And so there has been a lot of tailwind throughout the whole second half of 2020, throughout the first part of 2021, then leading us up to this report where we're now at the perhaps the end of the most intense part of the pandemic. And so the question is obviously how much of the growth we have seen is sustainable, and how will this impact the companies for the long term? So perhaps that is somewhat guiding the caution on the outlook in which many investors feel around these companies now for Q4. And if you look at Evolution specifically, by the looks of it, fantastic report. Revenues 276, up 97%, EBITDA 192, a healthy 70% margin, up 113%. a fantastic report by all means, albeit some of that growth is coming from acquisitions, and the underlying organic growth wasn't that strong. Now, perhaps the most respected company in our industry over the last 2 years, and they have been one of the few companies to properly innovate. They've opened up new categories such as game show, and it's just been a breathtaking run and display from arguably the best management in the industry. And it's been so interesting to follow as an industry man, because they certainly provided a lot of value to the industry, and they will continue to do so. You might ask yourself, though, how are they going to continue to add to this success? How are they now going to take the EBITDA from 192, growing 113% to 400 million to 600 million in the years to come? And you're reaching a size with Evolution now where you might have to ask yourself whether sort of the industry is large enough to support the growth in which they need to keep displaying if the share price is going to continue having the same momentum as it historically has had. And I think if you go a bit deeper into the report and you start to look at it, I think the most interesting thing I noticed was the split between geographies. Now, if you look at the quarters throughout 2021, starting with the Nordics, 60 million in Q1, 60 million in Q2, and now 90 million in Q3. If you go to the UK, 21 million in Q1, 90 million in Q2, 90 million in Q3. Rest of Europe, arguably a lot of Germany was in that bracket previously. 104 million in Q1, 104 million in Q2, 103 million in Q3. So there isn't much growth in what throughout the year in what has historically been the strongest markets, meaning that the growth has to come from the remaining market, Asia, North America, and others. Now in Asia, they've gone from 53 million to 65 to 76. And obviously the question is, can they continue to take market share from Asia gaming through partnerships, and how quickly can they grow there, and how large can they become? North America, 21 in Q1, 27 in Q2, and 31 in Q3. Now, how fast can this market grow? How many states will regulate casino in the sort of midterm, and so where is Evolution going to find growth? Now, if you look at the RNG segment, then NetEnt Red Tiger growing at 3%. Most of the growth in RNG coming from big time gaming, where obviously there is a lot of license revenues from Megaways. Question is how much that can grow. And so the question, I guess, around the report remains, okay, Evolution, phenomenal company, arguably the strongest sort of operation in the industry at the moment in many ways, perhaps compare that with Entei and a few others. But where, irrespective of how good they are, where are they going to find a reasonable growth to continue to support the share price increase that investors have enjoyed over the last years? So that's the initial thoughts on the report.
Yeah, absolutely. And I guess the story here is twofold. It's as you rightly mentioned here, the growth from NetEnt and Red Tiger has only been 3% quarter on quarter, essentially still stagnant. Almost a year, or pretty much on the day a year after the acquisition was announced of NetEnt and Red Tiger here. And we've seen the product plan being rolled out over the last quarter with releases under Red Tiger and NetEnt that was supposed to lift those brands, but we haven't seen that increase in revenue yet. And the second part of this, as you mentioned, is on the North American side of things. It's very much up to the regulator, perhaps, what states are going to open up eventually. And I mean, Robin, you obviously are quite in the know in general on an operator level, seeing that you obviously have your own experience from that side of the fence. What's your thoughts on North America in general and the states opening up for casino as we move forward? Because America obviously is traditional sports betting centric. Is it so sure that so many more states will open up for casino in the near term, or is this not as straightforward as perhaps many analysts believe?
I am a layman in that regard, but I do speak with lawyers and regulators in the US and with companies over there, and I do get their take on the situation. And one thing is what companies are saying publicly, another is the companies displaying in more private conversations. And I've been bullish on the American market. I always believe that the regulation of online gambling, casino, would always follow suit once sort of the initial sports betting round is finished. And I do think when you see the amount of states that has introduced a signal that they will introduce iGaming regulations, that it has been fairly reasonable to assume so. But of course, it won't be as quick as people believe. Back when the sports betting market opened up and PASPA was propelled, I told investors that yes, this is great, but it will take more time than you think. It's not done in a year. It will take a few years to open up all the states and to establish the market and so forth. And I think the same will happen in casinos. So obviously, a question is, for Evolution's sake, with revenues now of 32 million, how fast will it open? In order for them to continue to grow the group revenues as a whole. And that is a crucial question for the share price.
Yeah, and Martin Collison was very bullish on the North American market a couple of months ago. He did a rare interview where he claimed that the North American market could become 10 times bigger than the European market eventually. Now the question is, of course, how long that is going to take and so on. And I guess another question here as well, Robin, is I guess it's maybe not the easiest to answer this, but why do you think the RNG side of the business is seemingly stagnant still? Is this due to the legacy in NetEnt, who kind of had seen its glory days when it was acquired? What is needed to turn the ship around on that front?
So I think we're perhaps a little bit too short term on Evolution and the RNG business. I think they knew what they did when they acquired a very strong brand. Evolution is running through a network model. They don't contract directly with customers, and therefore a brand is very important to be recognized across this network. The problem was that NetEnt had an enormous legacy issue in their technology, and one of the most encouraging parts of the Evolution report was the very strong focus they have on refactoring the platform and relaunching the platform. And as operators throughout the industry has known over the last months, how there is a single integration point to Evolution. And this is the start of a reform of the NetEnt brand, I think, and for them to release new content quickly to operators. It is often so that in a company that the success you have operationally within an organization only sort of materializes a year or two after the strong run you actually had. So my point is, if Evolution have done something amazing on NetEnt side this year, perhaps you won't see it before, let's say, the second half of next year and the years to follow afterwards. The market doesn't always appreciate the time it takes. And likewise, when companies are running well and managements are not doing a good job, then perhaps the decline will come the year after. So I'm cautiously optimistic. I know how strong the Evolution team is, and I know what they have done, a little bit about what they've done on the platform side there. And I believe that will greatly fuel what is obviously an enormously strong brand on the RNG content. What's more interesting, though, is sort of the RNG content's relevance as a whole, and how strong that product vertical sits in the current customer demographics, and whether that in itself is something that can help fuel the growth of Evolution. The margin in the first place, typically our RNG content is selling at anywhere from 4 or 5% in some markets to perhaps up to as much as 11-12% with some tier C and D operators, whilst game shows is selling at a much higher price, and the Evolution margin is at 70%. And I think most investors are following their bottom line growth and not their top line growth. And if we can reasonably assume that it will be hard to improve the margin, then even if you manage to get revenue growth in the RNG content, are they really going to be able to not dilute the margin through increasing the share of wallet of that part of the product catalog? And that remains to be seen. So another very interesting point to follow is obviously how they have released new game categories. And perhaps if you go bigger picture, if you're thinking sort of how Evolution can grow into the future and become that 400, 600 per quarter million bottom line company, then they actually need to take responsibility now as one of the largest companies gambling worldwide for growing gambling as an industry to new demographics, go past the original 6-7% of the population. How can they turn out content that 10% is interested in, that 11% is interested in? And that is a challenge that Todd and his team has at the moment, and they seem to be taking it very seriously. So that's more, perhaps, for me as an industry person, one of the most exciting parts of the report and sort of the strategic outlook. What are they going to do on the content and the product side to take that company into the future?
Yeah. And obviously, we've seen a lot of innovation from Evolution here, as you rightly mentioned. They invented the product vertical of the game shows, of course. And another way, I guess, to grow is to buy revenue, essentially, or to acquire other companies. And I notice here that you are sitting in a very interesting chair here of pragmatic pragmatic play, the nemesis, if you will, of Evolution. And so we speculated a little bit here before, what could be some potential acquisition possibilities of Evolution, and you pointed out, Robin, that it's difficult for Evolution to acquire while still maintaining this incredibly high EBITDA margin. It seems like the BTG acquisition was a hand in glove for that very reason. It was a low cost and high revenue generating organization. But what do you think, Robin? Like acquisition-wise, I mean, there's speculation from analysts that Evolution would acquire Sportsbook, for example, but Sportsbook obviously is really low margin, so that seems very unlikely. It's also an area where the business is completely unproven in. So I think from an industry point of view, that would seem very unlikely that they would go into a new vertical. But where do you see acquisitions coming from, if any, for Evolution?
I haven't been a fly on the wall in their management, and they seem to be smarter than me. But if I were to speculate, then I would presume that this company, who has always been very disciplined and very strategic in their timing and their choices, will be very cautious. They have currently, three. At least you can add a couple of smaller acquisitions there as well, but 3 major acquisitions where they are still integrating it into the company and where they have a lot to prove for the investors. And if anything, I think the company would be very certain to not lose investor sentiment. And so I think they will focus on that. And I don't really see them aspiring to grow through more acquisitions in the RNG space. I think they rather would want to demonstrate their capability to innovate through the fundament that they now have acquired themselves into. And to the second part of your question, though, I think that's more interesting, whether they, because even if they do acquire an RNG sort of provider, it won't be transformative for the business as a whole. They're a casino in their DNA. They're the strongest casino company in the world at the moment. Yes, they can add more content to their catalog, but it won't be transformative. And it will certainly not improve their margin because there isn't a single company out there left that has a higher margin than Evolution. So for anything, it would be to gain scale. And the second question you are asking there is whether they would acquire a sportsbook. And I think that's a more interesting question. And again, I think the company, I met a few of the management and founders throughout the years and discussed with them, and they've always seemed very disciplined and focused to me, and very clear cut in what they do. And I don't think they're going to go and acquire a sportsbook now. It would be too risky for a company but whether it be an interesting strategic move in a 3 to 5 year perspective, whether it would be something, I think that door is still a little bit open, but not very likely.
Yeah, I think you bring up the question here of discipline, I guess, from the leadership. I guess it's easy being a CEO and in the leadership evolution and having pressure from shareholders and question how will you grow the share price, essentially, and the easy way out, so to say, or the easier out is to acquire or enter a new vertical and so on. But it's potentially then that would be a short-term play, let's say, the disciplined way would be to grow more organically and to kind of take it step by step and potentially taking a step back in order to take 3 steps forward.
And if you look at Evolution and what is their core strength, and they have something which very few, if any, gambling companies have online, which is they have a strong competitive position. Facebook have a strong competitive position within social networking. Evolution is actually one of the very few companies that have a strong competitive position in terms of sort of the true meaning of strategic positioning, in the sense that I think they're perhaps the only company which provides content in the casino space that an operator in most parts of the world cannot make do without. Okay, so you can perhaps take away, I'm not going to name drop anyone, but one of the top 4 or 5 contenders in the slot space, right? And you'd still fare fine, but you can't take away Evolution as a live casino. So, and why is that? Because they have focused on building the nitty-gritty improvements throughout the years, which have eventually turned into an enormous product advantage, right? Which have manifested itself in terms of a brand advantage, also down to the player level. So I think what it's in their core strength as a company is actually to be innovative on a product level. Yeah, they're fantastic operationally, they're fantastic sales-wise, marketing-wise, they take care of their client and all of that. But it all stems from their ability to deliver the best product. And that is something I don't think they will forsake. I think they rather will try to find growth by utilizing that to grow casino as a whole.
Mm-hmm. Interesting. Yeah, it'll be interesting to follow here the next steps of Evolution. And like you're mentioning here, where are they going to find growth? And I think most interestingly will be to see Q4 and Q1 on the RNG growth, particularly. That's going to be very interesting to see. Shall we jump over to Kindred here as the next step, Robin? Also very interesting, and also a report that is mostly concerning the shareholders for what's going to come in the next report, more than what happened in this report. But nonetheless here, the Kindred report came out the other day, seemingly quite strong figures. Again, Kindred fell on the stock market about I think something like 10 to 11% yesterday, and that is very much based on what's going to happen in the next quarter. But what's your thoughts here initially on Q3-21 of Kindred?
Kindred is now a casino company. It has historically been known as Unibet and as a sportsbook-led company. They are now a casino company with close to 60% of the revenues coming from casino. And if you look at at the year-over-year growth, if you take Kindred, for instance, the sportsbook declined with 4% and their casino grew with 16%. Okay, so that's the first very interesting element to take notice of. If you look at the Kindred as a whole, momentum in Belgium, okay. However, Superbet just acquired Napoleon and is coming in with a very strong proprietary offering in Belgium. And Superbet has proprietary prices, they're very good, and they're going to get some very tough competition there. They have a reliance on France. France was down. The climate around gambling in France is not very good at the moment politically, and there is restrictions coming on marketing, by Kindred expanding to other leagues than other sports and football and so forth. UK is tough, so they had to withdraw from Netherlands, and who knows how quickly they will gain back those revenues once they eventually get the license, and how much damage has been done, and how costly it will be to attract and reactivate those customers. So I mean, the whole Western European segment, which is a very large chunk of Kindred's revenue, is very much up in the air. Now, that's not to sort of paint it black. They are very strong in some of these markets, but yeah, it requires very strong execution if they're going to continue to grow. If you go to the Nordics, massive payment issues in Norway. And if you look at that market, which is historically a very strong market for Kindred, either it's going to get tougher as an offshore market or it's going to regulate. Either way, Kindred is going to lose. And Finland, where they also have a lot of strong traction, is a market that is going to have banking implications next year, and which eventually also will get tougher for offshore operators or regulate, where they also will lose. they've gone into 6 states in the US. However, they're spending more marketing than having revenues, and despite that, the revenues are declining. Okay, so if you look at those aspects, it's no wonder that the report, that many people are asking themselves, where is Kindred going as a company? However, let's not forget that if you look at it from an industry perspective, Kindred has perhaps been the company. I'm going to be careful here because there's many good companies in our industry, but from an operator perspective, if you go to the traditional Malta companies and all the companies come up over the last 20 years, they've been known as a very strong organization. It's a really strong company. It's a really professional company. They have grown into France. They have grown into the UK. They have grown into Belgium. And they still have Denmark, which is a very strong market for them. And, they're cementing a partnership with FC Copenhagen, shirt sponsorship, So, I mean, if there's anybody who can do it, that is them. But while their operational execution is strong, while the marketing is strong, while their product is strong, where are they going strategically? And what is the plan for Kindred as a whole? Is it to stay in these markets and grow and become a top 1, 2, 3 in all of these markets and just stay there? Are they thinking bigger? Which leads me on to, obviously, they acquired Relax. They have gone into the US, and perhaps there is something there. Is Kindred a company that is now vertically integrating to utilize their operational expertise to create a really seamlessly integrated company that is very strong, that is in several US markets? Are they positioning themselves perhaps for consolidating with somebody larger? Who knows? But many people is thinking so. So, I mean, the takeaway from the report, I guess it wasn't going to be a good report, and it's been favorites and issues now in the start of this quarter, and they had all the issues with Netherlands. But fundamentally, I don't necessarily that changes the future of Kindred to be value accretive if they continue to execute as good as they've always done and to position themselves to perhaps integrate within an even larger group.
Right, it's really interesting, Robin. I mean, to summarize, it seems that looking at Western Europe, particularly, and the Nordics, the industry is facing strong headwinds at the moment. A lot of uncertainty, as you mentioned here, with Norway, Finland going to regulate, and obviously, like we have been hearing repeated over and over and over, is the Netherlands, of course, and the quick 180 that happened in that market where Kindred had to close shop from one day to the other. And I think something that perhaps the investors are not aware of is the fact that while Kindred will return to that market, the regulator does not allow Kindred to use the database that they have built up over the last 20 years, right? So existing customers have to register a new account. Kindred is not allowed to send any form of marketing related messages to that database that they have built up over the last 20 years. So Kindred is entering a completely new market from scratch. And not to underestimate the fact that Bet365, particularly, who was granted a license, they have a 6 to 9 months head start in that market to acquire players. And so when Kindred does go live, together with stiff competition from other operators who will seemingly go live at the same time, it's going to take a lot of investment in that market, I would imagine, before they even turn profitability again, and obviously taxes on top of the revenue and so on and so forth. I mean, it seems to me, and above all of this is the fact that 1/3 of Kindred's EBITDA came from the Netherlands, right? So they are chopping off 1/3 of the revenue from one day to the other, which is seemingly not going to come back from that market ever, potentially. I think that's important to realize that fact, that it's not just a temporary loss of revenue; it's a long-term loss.
Yes, and I don't think Netherlands came as a surprise in terms of Kindred for sort of the industry at least, and I think most of the savvy investors was also aware of the sort of share of wallet ahead of Kindred's profit. But let's not underestimate that they've been there a very long time now, and while there was little competition, they've been able to build a relationship with many customers, and the customers who are at Kindred is generally typically very happy. So I have no reason to not believe that they have delivered a very good customer experience for all those years to the customers in Netherlands. So even though they aren't necessarily registered now, and there are coming competition, once they hopefully will be allowed to enter Netherlands again in Q2, then from an above-the-line marketing perspective, it shouldn't necessarily take that much to ask customers to quickly register again and continue playing, provided they are reasonably satisfied with the customer experience so far. So I think it is going to be costly, but perhaps not as costly as many would fear. It can in no way or shape or form be compared with a new entrant. And I think that's very important. You won't see those marketing deltas that the new entrant would have to build, top of mind and the brand awareness in Netherlands. So perhaps 6 months, and they will get back on the grind. But obviously, as you mentioned, in terms of profitability, there is a tax there now, which is very high, and that will take a long time to absorb into by sort of operational efficiency and brand awareness. And they've had strong competition, so we'll never get back to the numbers there was. But as investors, we only look at it from today and onwards, whether the share price will increase. We don't think about the past. So in that sense, it is interesting to look at the growth prospect as sort of they look now, not what has been.
Yeah, right. And Robin, I must check as well. So you mentioned here North America as well, which Kindred have, publicly obviously gone in really hard in and tried to. They are investing heavily into that market in order to establish themselves. They had as a goal, according to Manistan, the SVP of North America and Kindred, to achieve high single-digit market cap in the states where they go live. And now, a year later or so, I think that is nowhere near to be the case, of course. And as you pointed out here as well, they decreased the revenue from North America quarter on quarter with 15%, and that is after activating their NFL partnership, for example, and other sports partnerships as well. And also the group revenue from North America, I think, is somewhere around 1.5% at the moment, and the market is not profitable. So I don't want to sound too negative or too nostradamus here with Kindred, but I'm just going to ask you, Robin, if you were to make an investment case for Kindred, what would be your argument? If you would take Henrik Tjärnström's hat now and convince the investors why Kindred is a company for the future, what would be your arguments?
Watch and bet and operational efficiency and strong management. I don't believe in the US prospects. I don't think they have a brand. I don't think they have an in-house platform. It's going to be very costly to build and operate and maintain one. And I think it's going to be tough. They're stuck in the marketing trench or quagmire that everybody else is in that market. So that's tough, but they might know something I don't. And therefore, we give them the benefit of the doubt, despite the first year. However, look at what the company is churning out. Okay, what is one of the sort of tokens of a very well-run organization is that they actually are able to innovate, and that they're able to predict the future, and that they're able to create something that truly brings value to their customers. And they recently come out with a product called Watch and Bet, and we discussed it, Pierre, if you remember, before They came out with that in a podcast here, I believe, that a product like this has to come. If you're looking at, okay, where is the sportsbook industry going? Perhaps the time where you sat and had sort of a card-based or a list-based odds on a website while you watched the match on the TV is about to disappear, with two-way TV coming for streaming and so forth. Perhaps it needs to be a much more interactive experience where you're watching the match, you're watching streamers, presenters while you're betting there and then, and what you should bet on comes to you rather than sort of scrolling endless list of markets and odds. And they clearly seem to have been taking that seriously, and they're one of the first movers into space. And they wrote as a little note in that report that not many people perhaps noticed, that it had received a very nice welcome from their customers. And obviously people would say that in general, but Kindred is a strong and very serious and professional company that don't tend to, muddle about with their statements. So I tend to trust the management when they're saying that the early interactions with this product has been very good. And obviously it is an MVP, but is it a direction for sports betting where Kindred can maybe not be 10 times better from a technological perspective than their competitors, but be there very early on and develop a proposition that is very attractive, and therefore continue to grow as a sportsbook, and therefore gain edge in some of these markets and so forth. And that, I think, is very interesting. So I would still say that it's a very smart management, it's a very strong operation, and they're showing an ability to innovate at a product level, and that needs to be an investment case. And then there is a strategic question and sort of a market question, and how they succeed that they will surely address.
Yes, and I would add to that as well that I committed myself here earlier in the year that if Kindred doesn't get acquired by the end of the year, I would eat my sock, and so I would still say that for anyone who is listening, Kindred is now at a discount, and if you're a media company in the US, for example, looking to enter iGaming, or if you're a land-based casino looking to go online, Kindred would seemingly be an excellent potential acquisition. I would add to that as well. Who knows?
I believe that was a sock you ran a marathon in, Pierre.
Yes, that we have another bet here. Yes, that we need to do it as well. Moving over to Betsson here, Robin. Our one of our most favorite old legacy brands here. There's been a lot of turbulence in Betsson for once. Betsson usually...
Are we getting tabloid now?
Now we're going full tabloid. Yes, and.
Okay.
Pontus, obviously Pontus Lindvall, the original CEO of Betsson AB from 1999. A lot of legacy from Pontus and his own family, obviously being a major shareholder in Betsson. They went through this recently where the board decided to let go of Pontus Lindvall in the quest for new leadership. Now, as we all know, this was reversed. The shareholders were not consulted, including Pontus' own family, which is one of the major shareholders in Betsson Group. And they decided to basically reverse this decision, let go of the chairman of the board, and reinstate Pontus Lindvall as CEO of Betsson AB. In the middle of all of this, all of a sudden, Netherlands happened. They had to drop that market. And then, of course, came the quarterly report here the other day. So Robin, again, I pass over the ball to you here. After all the drama, after all the things that are happening in Betsson, what's your take here in general?
I might be a little bit biased, but what the hell is going on? I mean, here is my outline, having lived in Malta for my fair share of my life. Betsson was, when I arrived to Malta in 2010, the company to work for. They were the coolest kid on the block. They were the most innovative company that did acquisitions, and it was where everybody wanted to go. And for reasons that can be discussed up and down, that changed. For a while there, Betsson was known as the iGaming University in Malta. They were bleeding employees. Everybody wanted to leave. And many companies rose in the wake of the downfall of Betsson in that period, albeit not as clear on the operational KPIs. Obviously, they had a very strong position as a very early mover, and with the strong execution they had, it was serious trouble going on in that business. And then that has been turned around. Okay, when I speak with people in Malta now, Betsson is again a very well-respected company. They managed to put in place a very strong management, a very savvy management, and who has been on top of this? It's Pontus, who has been around the iGaming industry since forever. He seems like a very street smart person behind the sort of more logical exterior facade, and who everybody knows in the industry. So, I mean, yes, you can look at KPIs from one quarter to another, these things, but look at the overall trend. We have a company that is gaining respect, that is becoming increasingly attractive to work for, that is also managing to address one of the major question marks that has been around Betsson, which is your sportsbook. Okay, so Betsson has obviously been a casino company for all these years, and while they year after year try to become a sportsbook, we all know that building a sportsbook is enormously difficult, much more difficult than a casino, and player account management system. But over the last years, they have managed to. And if you look at the last report, they had an increase in sportsbook of 24%, for instance, which is not too shabby at all. If you look at them from a strategic perspective, if you, for instance, compare with Kindred, who has over these years become much larger than Betsson, Look at the market mix of Betsson and what's going on. So they have markets such as Italy, Central Europe, Asia, and Latin growing at a good pace. So I mean, here we have a management that dares to take risk. You know, they have acquired some minor companies, they have managed to grow them. They are in markets that in the 2 to 4 year perspective will probably regulate, but over the next 0 to 3 year perspective will probably be very attractive in terms of taxation and so forth. After all, investors, they care about growth prospects and bottom line and margin. And I mean, it must have been quite a turnaround for Betsson to identify these new emerging markets. And if you look at the Central European markets, then regulators are typically much more business friendly. If you look at Latin America, regulators have barely started and the market is growing quickly. Italy as well, very attractive market. And now they've also gone into parts of Asian markets. So, I mean, they don't sit there with the same issue as, for instance, Kindred that is stuck in UK, which is becoming increasingly difficult. France, that is becoming increasingly difficult. Netherlands, that is becoming increasingly difficult. Albeit Betsson through Orange obviously had those issues too. But they are now growing in markets that are very interesting from a growth perspective. So, I mean, Betsson is perhaps a little bit more opportunistic in their strategy, but from an investment perspective, you might feel that it will pay off over the next 0 to 24 months.
Yeah, it's a very interesting company. I mean, I spoke to Pontus Lindvall here a couple of days ago in regards to their quarterly report, and we spoke about the emerging markets in general and the ability to not be so dependent on European revenues, as we see here with the headwind that the European markets are facing. And one of the things that I noted in the quarterly report that I mentioned to Pontus as well is the fact that Africa, if you do a Control F in the quarterly report and you search Africa, it's not mentioned a single time, right? And if you remember, a year ago, BetSafe launched through in Kenya, and that was one of the emerging markets that Betsson was hoping, had high hopes for. And I asked Pontus about this. Why is Africa not mentioned at all? And he said that the revenue from Africa is negligent for the moment being, and he himself admitted that it's been a disappointment, actually, the African revenues here in general, and he's looking more towards Latin America, Canada, and so on for growth over there. So what's your thoughts in general here? I mean, I don't know if you have any insights into Africa in general. Is this a local kind of, let's say, overestimation by Betsson, or is this an industry-wide fault to overestimate the African market?
You do have companies that has been very successful in Africa, Sportpesa, for instance, and many others. But I think it's still a little bit too. It's a massive opportunity for many early companies and sort of for smaller growth prospects, and it's really coming up. And many people are excited for it now, following sort of Latin. But when you look at the total revenues of Betsson and the growth they need to have in order to instill confidence in the market, then perhaps it's a little bit too early, but it will definitely come. So is he doing a smart thing, dipping his toes into that market and learning and getting insights and getting connections and so forth? Yes. Is it going to take a long time to build it up to sustainable large revenues? Also, yes. But as a shareholder, I would applaud him, at least if I was very long-term in the stock. So again, I think you're just showing that there is a savvy management that understands that there might be a bit of transformation. They understand the regulatory winds. They understand the marketplace on a worldwide basis. They've been around since forever. They understand that ultimately, as a company, you need to drive profits and growth for investors, at least one of them. And I think they have turned the ship over the last years into a direction where you now can see that coming in the future. Although some of that would be mitigated by, difficulties in Norway and Finland and so forth, which are strong markets, difficulties in Holland, as you've seen. But they're definitely positioned, they at least have a strategy that is easy to understand from a pure sort of value creation perspective.
Yeah, it's worth noting as well that Betsson still derive 83% of their revenue from Europe. And again, the question of diversification can they diversify the revenue streams quick enough before other markets in Europe kind of take a 180 turn potentially as well? You mentioned Norway here, of course, Finland and so on. What's your expectations here in general now, Robin? I mean, Betsson is clearly very Nordic facing, and there's been these challenges in Norway, of course, and it hasn't really been that much communication of what's happening in Norway, particularly, and then Finland again. Is this something that investors should be concerned about?
As mentioned earlier, Norway is either is going to go in one of two directions. It's either eventually going to regulate in a few years' time, or it's going to be increasingly difficult to operate there. Either way, it is negative. Now, it has been a strong market for most of these companies for years, and obviously, with payment issues that are currently quite massive in Norway, then it will be difficult for them to grow. But I mean, overall, this is a small market in the bigger world. And Betsson has some of those 83% in markets that are quite attractive and where they have a strong position. And I mean, they've taken a hit in Germany, they've taken a hit in Holland, and they have written down. I think they're only left with risk now in UK. So I mean, even though the rest of the world in that sense is only perhaps, I don't know, 15-17% in that range, if they can grow slightly in Europe and they can add growth from the rest of the world now, where they seem to be very well positioned, then you have an investment case, right?
Mm-hmm. Absolutely. I think I mean the sentiment here. If you only look at the stock market and the share prices of these Nordic-facing brands here in the last month or two, it's been a quite bleak story. Let's say it's very much the sentiment that we are heading into winter as an industry, as we are in the climate as well outside here. Do you get this feeling as well, and do you think this is justified?
Yeah, I think it is justified in the sense that you had COVID, you had some major acquisitions in the US, and obviously they created an immediate sort of a very positive sentiment around gambling compared to what had been over the last 2-3 years before that. But we're just heading out of, traditionally at least, the weakest quarter of the year, with July, August in there, and September, which is not necessarily either a fantastic month for iGaming, and we're heading into Q4, which is the best quarter of the year. And the question is sort of, in these lockdowns and restrictions you're seeing during COVID, how much has user habits been changed? If you look at H2 Gambling Capital data, for instance, they expect them to more or less have been perpetually changed. They think that people have migrated online, and that albeit they will start to get more active again and play more in land-based outlets and so forth, that they've changed their habits. And I mean, if you then have a more resilient growth out of COVID, then perhaps people would have presumed sort of early on in the pandemic, and you're heading into the strongest quarter of the year. For those who is going into the US market now, you have a couple of sports starting up there now, and that will go into sort of high season. I mean, it's to me looking like a strong quarter is coming up. And traditionally, I've been almost day trading Q4 because I think investors that aren't that exposed to the industry is getting always disappointed by Q3, and then when Q4 comes, I don't know, even if we're still 10 years in, they seem to not fully appreciate the seasonality effect on these companies and how strong that period actually is. So cautiously positive about Q4.
Yeah, interesting. I mean, like I said, we'll see the effect of Netherlands in Q4, but on the other hand, traditionally a very strong quarter here. Last but not least, here, Robin, I'd like to jump into Kambi as well, the last of our 4 Scandinavian focused gambling companies here today. So Kambi obviously has been facing very strong headwinds here recently, with potentially losing RSI. It's not even something that has been decided yet, but obviously Rush Street here being one of the major clients of Kambi, decided to acquire the score, and the expectation is that they are going to build their own sports betting solution here in the future. At the same time, DraftKings is about to leave Kambi here now as well, which is their kind of the biggest clients, I would say, together with or in a similar level to Kindred. And investors, I think, are now concerned that they are seeing that this business model is fragile. At any time, some of the biggest clients could leave Kambi, and Kambi is obviously, they are kind of standing and falling on just a couple of major clients that are controlling most of the revenue to Kambi. And so with this in mind, and the quarterly report that came out here now with seemingly quite stable numbers, what's your thoughts here, Robin, on Kambi as a company and the quarterly report that came out here?
I'll go on a limb because I might be mistaken, but I believe there was Penn that acquired the
sorry,
score.
Not Rush Street.
Yes, might be
Penn Gaming.
Yep.
PNG,
yes,
my mistake.
They have about 5 to 10% of the revenues, according to Kambi, of Kambi. But look, a very strong quarter. We discussed it before. We expected it to be stable or slightly up, and on share price. And revenues 41.6 million. I'm reading off here, 48% growth. Wow. Well done, B2B operator. It's not easy to grow 48%. You need to sign contracts, it's long lead times. You need to integrate them, you need to maintain them, you need to support them. They will always ask a lot of you, and since they're paying a revenue share, you always have to deliver more. So operating profit of 14.7 million, I think, is very impressive. And I think perhaps the biggest concern is obviously that what is the strategic position of Kambi going to be? Will the strongest sportsbook be delivered by a B2B company, or will it be delivered by a B2C company? And what we are currently seeing is that management in iGaming believes that it will be delivered by a B2C company. The larger operators are looking to vertically integrate to control what is a complex product and to gain an edge. And that leaves Kambi in a difficult position, because then they basically, their business model is taking a hit. Kambi is having a premium price on their product. It has been considered, at least by them and many people in the market, to be the best sportsbook in the market, and therefore they sold it expensive. Now, if the big tier ones is now seeing vertical integration as a way to mitigate regulatory risk, to increase their margin, to gain a operational advantage when they're doing consolidation, when they're doing marketing and so forth, then where does that leave companies like Kambi? They would have to pick up the tier 2s, the tier 3s that can't really compete with the tier 1s. And if they're getting squashed in the marketplace, then that will ultimately put even stronger demands on Kambi to deliver to them. So how is their strategic positioning looking like if the current sort of dynamic shift we see in the marketplace where very large operators are taking over from B2B companies is continuing to happen? So I think that's what people fear with them, and probably rightfully so. Perhaps some of these early sort of very promising signs where everybody was rushing to buy their sportsbook and actually did a fantastic job in selling it across the United States isn't looking as sustainable in the long term. And they're still good, Penn, even if they migrate off, if they actually manage to build a proprietary sportsbook out of the score and justify their 2.2 insane valuation, then will ultimately the market be gobbled up by 1 or 2 or 3 very large companies that have their own in-house sportsbooks? And where will this growth then come from? If you look at what they signed in the quarter, not so impressive. They are now taking the market leader in Bahamas, and they got one of the 10 licensees in Netherlands. However, they're expanding with existing clients, and they're doing well on that. And also noteworthy is that Kambi was historically a very simple product in a way. Okay, they obviously did their own prices, and they had some models, and perhaps they were copying some prices, but mostly they had a strong take on the market, and they delivered these in a sort of white label sportsbook that you couldn't really make into too much of a modular product. And they've always been persisting on sort of not selling their prices modular. You take either all of Kambi or nothing of Kambi, although right. I believe they've become much more lenient there. Whilst what they're currently doing now, you saw their new bar top terminals, you've seen how they've been able to deploy into shops across the world from a remote basis. They seem to be a far more sort of complex technical operation in the sense that they're mastering the techniques, and they've been opening up a bit. You can now build your own sportsbook and differentiate on their APIs, and they've been developing this for 2 to 3 years, and now it's becoming strong, and perhaps they will start to sell their odds as well more modular. So the esports are very good at is something that can be interesting even to the tier ones and so forth. So perhaps they need to become a little bit more flexible, but they're on the road to do that to mitigate some of that loss of the larger operators, 888, DraftKings and so forth, opting to have an in-house sportsbook.
Yeah, super interesting analysis, Robin. So it's kind of like going from this old school mindset of it's all or nothing. Either you take all of Kambi services or you take nothing. And now we're moving into a future where the only opportunity for Kambi perhaps to work with the tier ones is to fragment the services essentially. But I would also like to raise another kind of final question here today, which is you spoke about the vertical integration here and the trend, if you will, that you see from the American tier one operators to go proprietary. Now, that is absolutely the case that this is a trend that we are seeing now, but it's also a trend that is not proven yet, right? The DraftKings is just now, after a long time, able to migrate into SB Tech, and we haven't really seen any other major operator migrate into the proprietary sportsbook either. So the question is this perhaps a short-lived trend that we're seeing? And on the European side, that has not been the case, and I wonder why this obsession to go proprietary.
So those who know me would know that vertical integration is something I've been predicting or sort of evangelizing for quite a number of years now, and believed in and tried to take gig the whole way. It's obviously very complex and it's very capital exhaustive, but I would argue that it has been proven. If you look at the largest company in the world now, it is Entain, in terms of, or the largest operator at least. And what are they good at? Vertical integration. And what was the old strategy of Kenny, from the days they bought Sporting Bet and B, when, it was to ultimately tie the whole ecosystem together. Which advantage has that given them? Okay, let's start to look at the dynamic shift in the industry as a whole and go a bit bigger picture so we can understand the value chain and understand where the industry is heading. So the first and most major sort of effect on the industry is regulation, right? And what's happening? Increased taxation, more limitation on players, meaning that you earn less of a margin on them. And what the company is doing? Economies of scale. Okay, so how they're achieving economies of scale is that they are consolidating. Entain buying business after business, Ladbrokes, Galacoral, and so forth. And you recently almost saw Entain and DraftKings even consolidating. So this is the way they're absorbing the taxation and the margin pressure. However, that means that one of the strongest capabilities these companies can have is not only sort of regulatory compliance, but also their ability to consolidate companies. And to do that well, you need to be on your own proprietary tech stack. And perhaps a trend I personally didn't spot at least a few years ago. Now, what does happen then is that these companies are looking for technology, and they're looking for brands. They're trying to absorb it either through increasing the margin on by owning the technology and improving the efficiency, or by buying brands with a high awareness so that their marketing efficiency becomes better. What they're not prioritizing is content. So over the last few years, content providers such as Net Entertainment, Pragmatic Play, and Play and Go, Evolution, and so forth has had heydays. They've not been hit as hard in terms of regulation. The large operators that are sitting on a lot of the revenues haven't prioritized this part of the product, and they've been able to grow quickly. Now that's changing. In the US, you're looking at not only sort of the technical part, but you're also looking at companies with an ambition and aspiration to do odds, to do casino content. You see in all the quarterly reports now, they're talking about how many exclusive games that they bought from third-party studios and so forth. So, I mean, the pressure is now coming on to the suppliers, and perhaps some of these suppliers will be rendered sub-suppliers, which you would have been in most other industries, to the larger operators who will ultimately consolidate and dominate the market. What else do the operators not have time for? Well, it's innovation. You don't see too much innovation coming out of the larger operators. They will claim they are the most innovative companies in the world. I argue not. It's been coming from the suppliers because they've had the time, so they didn't have to deal with much consolidation, acquisition integration, M&A activity, and so forth. They've been able to innovate, and it's come in the offshore markets, so the unregulated markets where you obviously don't have that much to do in terms of regulatory compliance either. So that's where the innovation is currently happening. And of course, those companies are interesting because they can deliver innovation, which perhaps isn't as valuable when they're in offshore markets where the multiples are low, where the regulatory future is uncertain. But if they can develop things that can truly bring up the KPIs of one of these larger companies, then that's very valuable. So I actually think that you will see an increased trend of vertical integration, of consolidation in the industry. You will see a pressure on the suppliers, and you will see only those with a strong brand or strong technology or innovation actually being acquired.
That's fantastic, Robin. Really interesting to hear the analysis here. And like we started off with this podcast today, I think it's really important to not only bring on voices that are professional analysts, but in your case, Robin, obviously you're an industry veteran. You're operators and suppliers yourself, so you have obviously firsthand information on these movements within the industry. And so I'd like to thank you today, Robin. This has been absolutely brilliant, super educational for me. I have a little bit better idea now of kind of where the industry is heading and so on. And it's been great, Robin. Do you have any final words as well? Like, if you want to give an advice to the investors that are listening today, is there anything, any final words on your end?
I think it is too early to. We need to look a little bit more into how things are developing for Q4. But I think there might be very good opportunities ahead of the results season in Q4.
Absolutely. Brilliant, Robin. And thank you also last week for a brilliant presentation here at iGaming Next. For anyone who is listening today, go on YouTube, search Robin Reed Happy Hour, and you'll see Robin's new product that is going to change the industry, bringing social into industry, a whole new level of players, and so on. I definitely recommend everyone to check it out. But for now, Robin, thank you so much, and I'll see you next time.
Thank you, Pierre.
Thank you.